Hello, my name is Malcolm, and once again, I warmly welcome you to my YouTube channel. This platform is dedicated to delivering educational content designed to support students pursuing accounting, finance, and business related studies in improving their understanding and enhancing their chances of success in upcoming examinations. It also aims to assist accounting and finance professionals in taking ownership of their continuous professional development. In addition, I offer ACCA tuition classes. For any inquiries, please feel free to reach out using the contact details displayed on the screen. In today's video, we will be covering the fundamentals of accounting for financial instruments. Please note that this content is relevant to ACCA students, chartered accounting students, undergraduate students in accounting and finance, as well as related professionals. The first and most fundamental step is to understand the meaning of the term financial instrument or financial instruments. For a broader and clearer understanding, financial instruments can be examined from three key perspectives: the accounting perspective, the economics and finance perspective, and the investment perspective. From an accounting perspective, which is the primary focus of this discussion, a financial instrument is defined as any contract that gives rise to a financial asset of one entity and a financial liability or an equity instrument of another entity. This is the definition provided under the International Financial Reporting Standards Foundation standards and forms the basis for accounting treatment under IFRS. From an economics and finance perspective, financial instruments are contracts usually documented in formal form that represent monetary value and facilitate the transfer of funds between parties. Their major purposes include raising finance or capital, managing and transferring financial risk, and providing investment opportunities. From an investment perspective, financial instruments are tradable assets or securities that investors buy and sell in financial markets with the objective of earning returns. Since the objective is to understand the accounting treatment of financial instruments under IFRS, the most important definition is the accounting definition. From the accounting definition, it is apparent that there are three components of financial instruments. Financial instruments can represent either financial assets or financial liabilities or equity instruments of an entity. Financial assets are resources that provide future economic benefits to an entity, and common examples include cash and cash equivalents, bank balances, trade receivables, loans receivable, and investments in shares or bonds. Financial liabilities are obligations that require an entity to transfer cash or another financial asset to another party. And common examples include trade payables, bank loans, bank overdrafts, bonds payable, debentures, and lease liabilities. Equity instruments represent ownership interests in an entity. And common examples include ordinary shares, preference shares, retained earnings, and share capital. For accounting purposes, financial instruments are broadly classified into two main categories: primary financial instruments and derivative financial instruments. Primary financial instruments are basic and straightforward contractual arrangements that give rise to a financial asset for one party and a financial liability or equity instruments for another party. And common examples include trade receivables, bank loans, and ordinary shares. Derivative financial instruments are more complex instruments whose value is derived from the performance or movement of an underlying asset, rate, or variable. And typical examples include contracts, options, swaps, and forward contracts. Regarding IFRS accounting treatment, three key IFRS accounting standards govern the accounting treatment of financial instruments, namely IS 32 Financial Instruments Presentation, IFRS 9 Financial Instruments, and IFRS 7 Financial Instruments Disclosures. IS 32 Financial Instruments Presentation establishes the fundamental principles for presenting financial instruments. In particular, it provides guidance on classification of financial instruments and distinguishes between financial liabilities and equity instruments. IFRS 9 financial instruments forms the core framework for the accounting of financial instruments. It sets out the principles governing the recognition, classification, and measurement of financial assets and financial liabilities, and also addresses impairment, derecognition, and hedge accounting. IFRS 7 Financial Instruments Disclosures specifies the disclosure requirements relating to financial instruments, ensuring that entities provide users of financial statements with sufficient information regarding the significance, risks, and the impact of financial instruments. In summary, the application of the 3 IFRS accounting standards on financial instruments can be approached through a structured 3-step process. Step number 1 is to apply IAS 32 financial instruments presentation to identify the existence of a financial instrument and determine its nature, including the appropriate classification between financial liabilities and equity instruments. Step number 2 will be to apply IFRS 9 financial instruments to appropriately recognize, classify, and measure the financial instrument, ensuring that its economic substance is faithfully reflected in the entity's financial position, financial performance, and cash flows. This standard also addresses impairment, derecognition, and hedge accounting requirements. And finally, step number 3 will be to apply IFRS 7 financial instruments disclosures for disclosure purposes, ensuring that users of financial statements are provided with relevant information regarding the significance of financial instruments to the entity's financial position and performance, and the nature and extent of risks arising from those financial instruments. Please like, share, and comment in this video, and don't forget to hit the subscription button so that you get notified whenever I upload new content.